I don't think this cycle will necessarily be the 4-year cycle as a result of that. But I do think that right now it's very, very bullish because just within the last couple of weeks, the two major central banks in the world have been pumping money into their economy, right? So the Federal Reserve started the rate cut cycle, and then China earlier this week or last week is pumping a ton of money into the economy and the stock market. And so as long as we don't get a recession in the near future, I think it's going to be very bullish.
Welcome to the 1 to 1 Million podcast, your weekly source of crypto alpha for those who never quit. Today I have on Qiao, a founding partner at Alliance Dao and an ex-founding head of product at Messari. Qiao is one of the most well-respected voices in crypto and often gives deep market insights and very contrarian takes on Twitter. He's a full-time VC who gets to talk to teams and projects on a constant basis and hear the thoughts and insights of countless developers across the space. In this episode, we dive into the markets, Memecoins versus altcoins, his thoughts on Solana versus ETH, crypto gaming, DePIN, and a ton more. Let's dive in. I guess my first question is, what's your current thoughts on the market right now? So I don't know kind of where you sit with your beliefs on the market, but I know a lot of people believe in the 4-year cycle.
Yeah.
We have seen sort of this pattern play out in crypto since Bitcoin's birth. Are you of the belief that like we're about to go into this parabolic phase? It's going to be similar, somewhat, maybe a little bit dampened to what we've seen in the past? Or do you believe something different is going to happen? Like, what's your take on where the market's going from here?
I think for the most part, the 4-year cycle has been a coincidence. And it just so happens that historically, the economic and monetary cycle has followed a 4-year pattern, but it doesn't mean that will continue in the future. So I think for the most part, crypto should follow the macro cycle. Especially Bitcoin specifically is a very good barometer of the global monetary supply. And so I don't think this cycle will necessarily be the 4-year cycle as a result of that. But I do think that right now it's very, very bullish because just within the last couple of weeks, the two major central banks in the world have been pumping money into their economy, right? So the Federal Reserve started the rate cut cycle, and then China earlier this week or last week is pumping a ton of money into the economy and the stock market. And so as long as we don't get a recession in the near future, I think it's going to be very bullish. And the sentiment right now seems neutral to bearish, just because we have been consolidating for like half a year, and most people on crypto Twitter are in alts. So alts have been bleeding against Bitcoin, even though Bitcoin has been consolidating. So the sentiment is actually quite bad, and I think that just creates a very good condition for a face-ripping rally.
You mentioned the possibility of a recession. I've been thinking about, because I've explored the thought of, okay, maybe we do have this recession. Everyone's been saying recession for like the past 2 years, like it was coming in like a couple months and it's never materialized. But like, let's say we do have a recession. Wouldn't you say that could also be bullish in the fact that we have a recession, the Fed now cuts rates, let's say to zero, and then we do quantitative easing? Similar to maybe what we saw in 2020, couldn't that also be a catalyst, like short-term bearish, but then long-term bullish?
I would agree with that. So in the short term, if we get a recession, probably all risk markets will go down. But then, like even if we get a recession, it's probably not going to be a really bad one with the data that we currently see. And so I think the Fed and other central banks will just keep pumping money into the economy.
I think so too. And you mentioned also China and what's going on over there. I know a little bit about it. I've looked into it a little bit. Have you looked into it more as far as, because I know they're cutting rates on repos, they're doing like mortgage rates, and it has to do with the real estate market weakening.
So the real estate is probably one of the biggest problems, if not the biggest problem for the Chinese economy in the last few years. Because the Chinese population really loves real estate as an asset class. So they store the majority of their wealth in real estate. And so, and also when you buy real estate, when you buy a home, you're generally pretty leveraged, right? You get a mortgage and you're like at least like twice leveraged. So the overall leverage in the economy was pretty high. And so the moment that real estate goes down by 30%, because of the leverage, people all of a sudden, become way more than 30% poorer, right? Like probably 60% poorer. So they lose the majority of their net worth because of the real estate crashing. And so there's a very big wealth effect there. So when you become poor, you spend less. And so, basically the rest of the economy goes down with real estate. So that has been a big problem. COVID has been another problem. The lockdowns, et cetera, really crushed people's spirit and consumer confidence in the last couple of years. So, in the last week, basically the government decided to try to solve this problem by pumping money into the economy, which the Chinese government is actually has rarely done in the past.
So have you ever read, do you know obviously who Lynn Alden is? You heard of her? Mm-hmm. Have you ever read her book, Broken Money?
No.
It's really good. She makes this case that, because our money systems are so broken, real estate carries this unique monetary premium. And that basically a lot of assets, like the stock market, everything carries a monetary premium where if, our money systems say were more sound and people felt more comfortable just keeping their money or their value in money, there wouldn't be this flight to like real estate, stocks, crypto, etc. And they wouldn't carry as much of a premium. So it's almost like this idea that real estate is a form of money that people use to store their value. It's like gold, etc. Obviously, we know these things, but like the monetary premium aspect, I thought was really interesting, and I'd never thought about that before. That like, hey, maybe if we had really sound money, we wouldn't store as much wealth in real estate and all these extra things. What about the election? What do you see happening? Because I think this is a really important part about the crypto markets coming up. What do you see happening? Like, let's say if Harris wins versus Trump wins, how do you see that playing out? Because I think a lot of people are concerned about the election and how it could impact the markets.
Well, let's start with the medium to long term. I think that's easier. I think Bitcoin will go up regardless. I think both parties have shown their willingness and ability to print money whenever things goes to shit. And because the government is in so much debt, they have so much interest payment, they have no choice but to print money out of their own debt. So I think Bitcoin will do really well regardless. Alts, I think it's a different story because, contrary to Bitcoin, which is more of a hedge against money printing, alts are more of an asset class of innovation rather than pessimism. It's an asset class of optimism rather than pessimism. And I think one of the two parties obviously is more bullish for innovation in crypto, more so than the other, right? So over the course of 4 years, I think there will be a big difference in terms of alts performance. But more importantly, I'm not pulling this out of my ass. I've seen this in hard data that we have over the last 4 years, especially the last 2 years, is that crypto startups, the number of crypto startups in the US has been going down very dramatically and going overseas. And we have hard data to show this. And so if we get the same party for the next 4 years, I think crypto startups or the crypto entrepreneurial spirit will be dead in the US. So I think that's the key difference between the two parties.
So basically your take is Bitcoin is going to, maybe there's a small dip after the election one way or the other, but long-term Bitcoin's going to be fine. It's not going to be really affected by it. Alts are a different case though. Let's say if Harris were to win, the Biden-Harris administration has been pretty aggressive against crypto. We've been waiting for this pivot to come, this long expected pivot. But unfortunately, it looks like just yesterday, like the SEC is appealing the Ripple decision. And so it doesn't seem like that pivot's maybe as likely as some hope.
There's no pivot.
And that could,
It's all gaslighting.
and that's very bearish for innovation in crypto. And so I think everyone accepts like, hey, Bitcoin's a little bit different, and everyone's okay with that. But like, we don't want these altcoins. We don't want your meme coins. We don't want all this other building is kind of the take from the SEC or whatever. So it'd be very bearish for alts, in your opinion. That's, yeah.
Well, I'm not necessarily saying that alts will go down, but the delta between the two scenarios should be pretty big for alts. That's what I'm saying.
So it's like the long-term growth, basically?
Yeah, so it's entirely possible that, the long-term innovation will continue to go up, but it'll go up a lot more with, Republicans than with Democrats.
As far as the alts, like you hear a lot of people saying like meme coin super cycle that alts are cooked because we have so many tokens now. We have, all these tokens launching, all these meme coins launching, like there's like 1 month where like 1 million was launched.
Yeah.
And so because of that, like no one's going to pay attention to the alts anymore. They're just cooked. Fundamentals don't matter. Where do you kind of sit in this weird spectrum of like meme coins versus alts versus kind of how all this plays out?
I think what you said there, I might have been the first person who said this. Like, I might be it's funny, the other day Nick Carter said he's the most plagiarized person on crypto Twitter. I was like, yeah, if Nick Carter is number one, I'm probably number two. Because whenever I tweet something, like 2 weeks later, I see people say the same shit. But yeah, my base case is, so people talk about alt season, right? Like historically, in every single one of the last cycles, we've seen alt seasons. And I'm increasingly skeptical about the idea of an alt season where all alts go up together. It's very unlikely to happen. And for the precise reason you mentioned, you just described, there's like 1 million tokens created per month. And there's just an oversupply of tokens. And meanwhile, there isn't a much bigger demand for these tokens compared to the last cycle. So even if the demand catches up, because the supply is so much bigger, it's very unlikely for all alts to go up together.
Can I make a case? I want to make the opposite case, which is I kind of view meme coins as almost like one category, kind of like NFTs were last cycle. And I think more tokens is actually very bullish. Okay, so like when you only have a couple tokens to bet on, like they do all go up and you really don't care. And that was kind of like 2017. Is if it had a really cool name, like that's kind of basically what you're betting on, is like how cool the name sounded, how sci-fi it sounded. And then in 2021, there was like more tokens, right? And now there's like so many tokens. And I feel like the more you have, the more need there is for a filter of some sort. Like you have to be able to differentiate between tokens. And meme coins are essentially all the same thing, right? Like there is culture to it, right? In the same way I think you would say is similar in some ways to NFTs. But they don't have necessarily fundamentals of like maybe cash flow, or like they're not really trying to build a real business, I guess. And so I would think like people keep saying like, when are fundamentals going to matter in crypto? And I think the more tokens you get, the more you need the filter of fundamentals to say, hey, this project's actually building something and is building some sort of momentum forward, versus these other projects might have price momentum. And maybe I want to bet on that. Maybe I want to jump into the meme coin casino, but I'm actually going to view that as separate when I'm making an investment. How would you view that kind of mindset?
Well, we need to first define fundamentals. Fundamentals could mean at least one of two things. One is real innovation, real cash flow, real users, right? Like that is the fundamentals that matter for the coins associated with the projects that are building stuff, right? But the other type of fundamentals for me is more of a mimetic value, a religion, so to speak, a shared story, right? So that is Bitcoin, but that is also the meme coins, right? Like with Popcats, all these meme coins have a shared story that their token holders appreciate, right? And so if the shared story continues to grow and if it goes viral, that is also fundamentals. So it just depends on what token you look at, what type of tokens you look at.
I agree with that 100%. That there is a type of fundamentals there. But if you look at like meme coins, it's like the vast majority of them, people are not making a profit on, right? There's just so many to gamble on that it's just really hard. And so the ones that do end up succeeding do well. And I think that you're going to keep seeing that. You're going to keep seeing kind of these culture moments reflected in meme coins. But it feels like meme coins are kind of like a flash in the pan per meme coin, right? Like it'll go up and then it comes right back down. It'll go up, it comes back down. There's some that stick like Doge and WIF and things like that, but the vast majority don't. Where some of these projects that are actually, they're trying to build something. When I say real, I mean like some sort of innovation. They seem to have maybe a little bit of a longer lifespan. And to be fair, like the most of them, maybe it's a medium term lifespan, but they do essentially the same thing. They'll go up and they go down. They go up and they go down. But then there are those that stick around for a long time because they are building something that at least today we perceive as like, hey, this could be really innovative. And I think of like DEXs, think of perps, lending markets, those kind of things. That when I say fundamentals, I mean that kind of thing. We're like, hey, we're trying to build a real company versus, hey, this is more of a speculative on culture.
Yeah.
Don't you think there'll be a certain attraction to that really is separate from meme coins, where people are going to say, yeah, I see these ones stick around for a long time, and these ones are a lot tougher to nail down. So yeah, maybe I'll take 3% of my money and throw it into the meme coin casino because I really think this is funny. But long term, I really think that a lot of financial assets are going to come on chain. So I want to bet on CalSwap in intense-based architecture. I want to bet on Uniswap or whatever.
Oh, there's for sure a large group of people who prefer the former, right? Like the quote unquote serious coins over the meme coins, especially the professional funds. But I think one of the reasons why meme coins have done really well this year, like if you look at the top 20 best performing tokens year to date, I think something like 70% of them are meme coins. The reason why that has been the case, I think, is twofold. One is most people actually don't understand the serious coins. It's too much for them, right? And they understand the memes, they understand culture. So most people would want to buy something they understand. That's one reason. The other reason is it is more mechanical, which is that the serious coins tend to have a pretty big supply overhang, and the meme coins don't. Most of the meme coins don't. And so in the former case, a lot of these retail investors are actually getting dumped on by insiders. And they figured out the game. Like after all 3 cycles, the retail have actually figured out supply overhang is a big problem. And so they're drawn into the other side, the mimetic side, for that reason as well.
It felt like early days in crypto that when you were like able to be like a VC, right? You got in early, you got to speculate, you were like free, right? I actually think markets want to be free. I actually do not like this whole thing of like, you have to be well connected, pretty wealthy to get into some of these investments early stage. And I think the markets would be better off just being free and let adults kind of spend the money however they choose it. And if they lose their money, I think the market would actually figure it out. And I think you can see that with something like Pump.Fun, where people are getting rugged on meme coins. The market came up with a solution to fix at least a portion of that. And I think if you give the market more time to cook, it would come up with better and better solutions. I actually think things like the SEC, and we don't need these things, in my opinion. They don't do a really good job. And so what you're saying is, on a certain level, like you had ICOs in 2017, and you had like things like that in 2021, but you really haven't had that this cycle. And the only way to access those kind of opportunities, those 0 to 1,000 opportunities, have been meme coins. And so there's been a certain draw to meme coins because of that.
Yeah.
And then on top of that, there's like so many people that have been rugged from like a project being like, hey, we're going to build the next sci-fi futuristic, this thing you don't understand. And, with all these complex words. And then if you find out it's just like nonsense and this project's going nowhere, and people are like, man, I don't even want to think about that kind of stuff anymore. I think this dog with a hat is pretty cool. I'm just going to bet on that.
Yep. That's exactly right.
Okay. I have like another kind of take on that. I think what you say is right, 100%. But I think another element of that, at least in my opinion, is you had this Solana, almost like this Solana cycle play out, where Solana went up in price. Okay, think of like a normal cycle. Bitcoin and like say ETH go up in price. You have this wealth effect go down and bleed down in the alts, and then it eventually bleeds down into like the Ponzi's, NFTs, etc., and then the whole thing collapses. That's like how every crypto cycle's played out. Well, this last cycle, or during the winter season, we had Solana go up in price. Then we had this wealth effect try to bleed down, But because Solana's ecosystem's, I think, a little bit newer, there wasn't a lot of great alts at the time to bet on. Like we now have things like we now have good apps that are interesting on Solana, but there wasn't necessarily back then. So I kind of feel like on some level that wealth effect just skipped all the way down to we had some NFTs pop off. Then there really wasn't much else to speculate on. And then meme coins just hit the market quick. And so a lot of that wealth effect bled into meme coins. The meme coins did really, really good, which is like almost always a market signal of like, it's like the bat signal for the market. Like, hey, money's being made over here. And so then the whole market kind of converges on that one thing. And then I think that also was some of the catalysts that sparked the meme coin, mania.
That's a very interesting thought, and I tend to agree. Because there's like Pump, for example, they tried Solana and then also Blast, and for some reason meme coins just don't work on Blast, and I tend to think that Blast is one of the most degen Ethereum layer 2s compared to the others, and if it didn't work on Blast, it's even less likely to work on other layer 2s. And there has been a bunch of Pump competitors trying the same thing on Base. It just doesn't work for some reason. It's very interesting. For some reason, the user base across these different chains are very different in terms of what they want, the type of products they want, and their preferences.
You see, I think it really is that wealth effect. And I think when you look at why we saw some meme coin action on Base, that was purely just what the market always does, which is like ETH succeeds. So it's like, okay, oh yeah, EOS, these are going to be the next ETH killers. Bitcoin succeeded. You had Litecoin and all these kind of things. And then Solana has this whole meme coin like super cycle happening. And so everyone's like, okay, what's going to be the next Solana like meme coin cycle? Oh, that's going to be on Base because it's similar for these reasons. So you had like some speculation over there if people tried to do it. But as a whole, like the rest of the market just didn't see that same thing happen. And I really think it was because it was unique to Solana in some aspects. I think they had all the elements that you talked about, which is people were a little bit burned out from some of the complexity. People did want the early stage, kind of deals. But I think the momentum of it was really carried from Solana appreciating in price.
It's also interesting that just still on this point, that this is the first cycle where copying a product on a new chain doesn't work anymore. Remember last cycle, like DEXs worked really well on Ethereum, and then people started copying on Solana. Same thing with OpenSea, right? And people started building NFT marketplaces on Solana. It worked really well. This cycle, for some reason, the products don't transfer very well. Like people tried to build Frentech on Solana before, like when Frentech first emerged. During the subsequent few months, people tried to build the same thing on Solana. It didn't work. Then people tried to build Pump on Base. It didn't work. And then people tried to build Fantasy, which is on Blast, on other chains. It also doesn't work. It's very interesting.
Do you think that's just because there's just not a lot of people? I mean, I definitely feel like the amount of users and the amount of like attention on crypto has massively depreciated. I see all these conferences overseas in like Asia where there's like tons of people involved. I'm not, and there almost seems to be a disconnect between like the things that they're doing, the apps that they're using, and kind of what we're doing over here. So maybe that's some of it, but it definitely doesn't feel like last cycle when we talk about retail showing up. I think of that as like all my friends were into crypto. When I talked about crypto, it's like I got a crowd of people come around me and be like, "Oh, you know stuff about crypto? I want to talk about crypto. I started investing in that." And now if I talk about crypto, people look at me like I'm a drug dealer, and they like slowly walk away. So I feel like maybe that's some of the reason.
That is a really good sign for where we are in the cycle.
So maybe we just need more liquidity. If like, as liquidity increases, as these things, rate cuts, et cetera, and it kind of starts to flow into the markets, maybe then it does start to permeate and we do have some of these copycats that end up working.
Yeah.
What interesting projects or like ideas are you seeing over at Alliance? Are there any shifts in building that you've kind of noticed over the couple of years? Like, it seems like there's moments of attention where obviously people see meme coins and like, oh, I'm going to start focusing on meme coin related things. It feels like everyone's always following some sort of trend. But have you seen any like meaningful like shifts of attention that maybe point us toward a certain future where you're seeing building go a certain direction?
There's definitely a lot more startups building stablecoin enabled products. be it cross-border payment or some kind of neobank for savings, or lending products like corporate lending enabled by stablecoin. So all these are really, really interesting products because they're solving a real problem across the world, mostly in emerging markets, but there are some applications that work in developed countries as well. But this type of products is, people have realized stablecoins work. Stablecoins are by far the innovation in crypto that has found product market fit outside of Bitcoin. It's not even close. Like it's Bitcoin and stablecoins, and it's not even close. And so founders have realized this and started building products enabled by stablecoin. I think it's a really good direction. It's a really good step in the right direction because historically, I guess for a number of reasons, VCs don't want to invest in stablecoin products because there's no tokens, right? Like there's no early liquidity, et cetera, et cetera. And the stablecoin related products also don't seem to take off as quickly as some of the crypto native products do. Like Pump, for example, Pump make like $100 million within half a year. Like things like this just won't happen with stablecoin products because stablecoin products involve the traditional legal system, traditional banking system. Look, all these things that touch the real world, things become harder. But things also have, products that touch the real world also have bigger moat, bigger defensibility because it's so hard to get off the ground. So historically, there has not been a lot of founders building this, but now there's more and more. And I'm really excited about that direction. But yeah, to your point, like every month or so, there's like new hype cycle, right? Like this past month, it was DeepIn. Like if you follow crypto Twitter, like everyone's talking about DeepIn this past month. And then the month before it was Telegram and Ton. And then the one before was Eigenlayer. Like every month there's a new narrative and like people just try to follow the trend. But stablecoin is one of the trends that I think is here to stay.
Yeah, I think so too, especially if you look at and this is when I say fundamentals. Look at Tether right now. Like they made more than BlackRock last year, which is crazy. Or maybe it was this year.
Like 100 people. BlackRock has like 60,000 or something.
Yeah, and yeah, exactly. So BlackRock has all these a ton of employees, a ton of all this stuff, and Tether's this really small company, small and nimble, and actually one that people have been really bearish on for a long time. And there's always been like some sort of rumor or whatever about Tether. They've always been sitting here in the background, and here they are, like during the bear market, they're just making so much money. They're like printing money over and over and over again. And it feels like we've had so many things that the market has paid attention to that have like been a flash in the pan, gone away, and Tether's just been consistently here in the background, just making so much money. And so yeah, like you said, stable coins do seem to be clearly a product market fit of sorts, and it feels like the crypto market would be a lot healthier if we didn't just have stable coins and Bitcoin, but we had 20 or 30 or 40 more of these kind of things where they were like these economies within crypto that were continually actually making money. And so that's where I feel like the market has to eventually kind of drift that way. What would you say maybe would be the next thing you would guess that would be like stablecoins or Bitcoin, where it kind of like becomes this stable income source within crypto?
I think it's either going to be DeepIn or some kind of social fi. Like okay. I know it's kind of consensus, but I don't always disagree with the consensus.
Yeah, that's good.
So DeepIn, so to be specific, DeepIn has proven the supply side, without a doubt. The supply side has been proven. The demand side, I think it's more of a matter of the particular industry, the particular market, and the founder's ability to execute, right? So like it's a matter of whether you think 5G is a good market. Like, is helium actually solving a real problem, a big problem that has been underserved? And so the demand side is yet to be proven, but I think something will happen there. Oh, by the way, when I say DeepIn, the letter P in DeepIn is actually it's kind of misleading, Because if you really think about it, the magic about DePIN is not the P, it's the D. It's the DE. It's the fact that you use token incentives to coordinate certain behavior, right? To bootstrap a new network, to bootstrap a new marketplace. But that network, that marketplace doesn't have to be physical. It could very well be digital, completely digital. A novel type of digital marketplaces or network. So when I say DePIN, yeah, it's DePIN, but also any other types of networks or marketplaces that are novel and that can be bootstrapped with tokens. That could very well work. So that's one direction, token-enabled or token bootstrap network or marketplace. The other direction is SocialFi. The reason why I think the timing is right is because we finally had a few blockchains that are scalable, low fees, and fast, and robust, meaning it doesn't go down anymore. Like Solana went down a lot last year, but this year is pretty robust. Blockchains that are finally mainstream ready. And we also finally have a critical mass of users on chain, which makes it easier for new products to take off. Now, most people on crypto Twitter underestimate how long it takes to build a really good product. Remember, Tether took 7 years, at least. Like Tether, I think started in 2016 or something. The first time I saw Tether, USDT, was 2016 on Poloniex. So it's been 8 years already. It takes 8 years for Tether to generate $5 billion a year. It takes a lot of time to build a product that people love and a lot of people love. So now with SocialFi, we've had this technology and critical mass of users for maybe just a year or two. It might as well just take 5 more years for SocialFi to go fully mainstream. So I think people just have to be patient. But yeah, SocialFi and DePIN or people say DVIN or something. Like that's a new word. Like, token incentivized marketplaces or networks. Like these two areas are very interesting.
Yeah, it's a good point. A poly market or prediction markets, I think since I've been in crypto, people have been talking about prediction markets as the next big thing. And they never were. I remember even just a couple of years ago, somebody putting out a tweet being like, remember prediction markets? Yeah, we never got that promise or whatever. But then you had poly market, which this election cycle has done really, really well. It came out of nowhere and it's so mainstream now. And so, it does seem to take a long time for really good products to be built. And I think a lot of people overestimate maybe what some of these things will do in the short term. And then they tend to underestimate what they could do in the long term, with enough building. One thing that I actually found really interesting recently is I went to this dinner. It's like a crypto dinner. And I sat next to, have you heard of the game Big Time?
Sounds very familiar.
It's like a crypto game. I sat next to them. I was just talking to them. And it was really big during 2021, but I haven't heard anything about it since. So I was just like, oh, are you guys doing okay? Like, do you guys have users? Like, are you guys still operating? Because I have not heard anything about it. And they're like, oh yeah, we have tons of users. And I was like, oh, okay. And I was like, are you guys profitable yet? Like, or how does that work? And he's like, yeah, we made over $160 million over the last year. Jesus. And 98% of that was profit. Yeah. And I was like, what? Wait, what? And see, that blew my mind. And I've never gone back and fact check it, but they were the head of the team. So unless they were just like blatantly lying to me, that blew my mind. And that showed me that maybe the market might be sleeping on on crypto gaming and like what could be in that sector. Have you looked into that at all?
I do want to touch on this again, like the way we frame things, like gaming. I think the word gaming is extremely misleading. Because if you really think about it, every product that people love in crypto are games. They're not like what we think about, what we typically say what video games are, but they're games, right? Prediction markets are a type of game. DeFi is a type of game. Memecoins is a type of game. So it really depends on what we mean by games. Like, do you consider those like digital casinos, like what's it called again? Stake. Do you consider that?
Stake and Rollbit.
Yeah,
I would consider those types of games, but what I mean specifically is more in line with traditional games. So think League of Legends, think Fortnite, think of these classic games that people you don't really necessarily have to love crypto to want to play. And think of the idea of like being able to own the assets you have in the game. So Fortnite makes like something like $4 billion selling their skins. But as a user, when you actually buy those skins, you're essentially just renting it from Fortnite. You have no real ownership. You can't sell it. You're basically leasing it. You're leasing the ability to use the skin. But imagine, if you could sell these skins and collect them as like digital collectibles, and if they could accrue value based off that, and the types of economies and markets that would open up. I think that would be more my focus when it comes to crypto gaming, would be something more in line with that, just like digital ownership of in-game assets.
Yeah. I mean, big time, if the number you mentioned is correct, $100 million a year is probably by far the most profitable crypto game I've ever seen.
Yeah, or there could be more of these games are making a lot more money than we think.
Yeah.
That's the thing. I've never heard anything about this, and
I do remember. It feels like I remember this game from back in the day, and I'm shocked that it's making $100 million. Like, there's also Pixels, like the one I hear the most about is like Pixels on Ronin. Is that, yeah, it's on Ronin.
Yeah, it's on Ronin.
And then there's all these new Telegram clicker games, which are infested by bots, by the way.
Yeah.
But yeah, $100 million, that's crazy. I need to do more research on this.
Yeah, I honestly need to sit down and do more too. But I think it is crazy. But I mean, across the board, if you look at some of these games too, they also have a ton of users.
Yeah, Pixels has like 6 digits, at least 6 to 7 digits of players.
Yeah, that's huge. And so I feel like maybe the crypto space doesn't it's kind of one of those non-consensus things where like gaming it's like kind of playful in some ways. So it's kind of like gambling, gaming, meme coins. It all kind of occupies this weird like category of like is not quite serious enough. But I actually think gaming could be a huge breakout hit when it comes to the crypto space, especially if you think about it I've talked to some of these game developers that came from the traditional space. From their viewpoint, it's kind of like the introduction of free to play and how that changed the gaming space. Well, the idea that you could attract people by these economies of like, hey, we're not like paying you tokens to come play our game like some of these tap games, but we're just letting the open market decide what these things might be worth. And as soon as you have like a breakout game where like, some of these assets, they could only be worth like $1,000, but it'll be kind of like Magic the Gathering or some of these Pokemon trading card game. They'll start to be these collectibles, and more people will be attracted to playing those things because the potential that they could earn some of these collectibles.
I mean, the thesis for crypto gaming, I think a lot of people really overthought it. My thesis for crypto gaming is you just trade some in-game assets. Like there's some in-game, because the game is so fun, some of these assets become valuable because people want them or collect them. People either need them to play the game or want to collect them because they feel attached to the game. And then they start trading those NFTs, and then the game just takes a cut, like 5% cut on the trading volume. Like that can be extremely profitable.
Yeah, $100 million. That's more money than most games. I mean, if Fortnite's making $4 billion and they're making $160 million, like that's not that big of a difference. I mean, it is a huge difference, but like for a obscure crypto game that most people in crypto aren't aware of making that much money, that's actually insane. And that's a huge incentive mechanism.
$1 million, that's a huge success for a game.
And if that's true, think about how many gaming developers are going to be like, well, what am I doing over here building this game when I could be doing that, making $160 million?
Yeah.
So I've heard, at least in some podcasts, maybe I'm not caught up, but last I heard, you're very bearish Ethereum, you're very bullish Solana. Mm-hmm. And I guess I just wanted to dive into what's your thesis behind that? Like, why are you so bullish on Solana and bearish on Ethereum and layer 2s, etc.? On
an absolute basis, I'm not bearish Ethereum or ETH, the asset. But on a relative basis, I'm relative Solana specifically. Yeah, I am way more bullish Solana and Sol, the asset. So I think we want to distinguish Ethereum, the community / the blockchain, and ETH, the asset. ETH, the asset, the problem with ETH, the asset is a lot of people own it. And so where is the marginal buyer? I think that ETH ETF really opened the floodgate. But empirically so far, for some reason, people don't want it. People want Bitcoin. People want Bitcoin ETF. Maybe that will change. Maybe that changes in a few months when we're in the quote unquote banana zone. But but for now, but even then, I think Solana's just Sol, the asset, is just way more undervalued than ETH, the asset. Like, if I didn't own any crypto today, outside Bitcoin, and I was deciding between ETH and Sol, I would put everything into Sol. If my goal was to maximize return.
So is this more of a like Solana is sitting at what, like 70 something billion, ETH sitting at like, I don't know, 300 billion, 400 billion. And so relative to the two, you feel like all tech, all everything else aside, the market's going to push Solana up at a faster rate. Even if ultimately, let's imagine a scenario where Ethereum wins out, like layer 2s are right, everything works out in the long run. In the short run, say ETH doubles in price. Well, just by the fact that ETH doubled in price, speculators are going to say, well, Solana, because it's fast, cheap, whatever, it could eventually get to the price of ETH. So, and it's so reflexive, it's going to 4x in price. Is that kind of like more the thought process?
Exactly. Like my base case, like let's say we take a time horizon of 5 years. In 5 years, I think there is a 50-50 chance that Solana wins. Like, to me, in 5 years, Solana and ETH, it's like 50-50. But even if the odds are 50-50, you want to own Solana today, right? Because Solana is 7 times cheaper than Ethereum, right? Like if the finish line is the same for ETH and Solana, then you want to own Solana today. You want to own Sol, the asset, today, because it's a lot cheaper.
I see. So it's really more of an investment take. But on a tech level, I feel like I've heard some takes on a tech level that you actually do feel like Solana, I mean, you just said 50-50 chance, but I feel like you've leaned more towards you like Solana on a tech level. Is that accurate or no?
The most important factor that I look at is where are the developers going? Because that is the most important leading indicator. Where are some of the best developers, some of the best builders and founders going? That is the best leading indicator for how the two ecosystems will fare in 2 to 5 years. And I am seeing a faster pace of the best founders, developers going to Solana than Ethereum. And in fact, I've seen more, I've only seen Ethereum builders and founders going to Solana, switching to Solana, and I've seen 0 case of Solana builders going to Ethereum over the last year.
Couldn't you make the argument, though, that just, okay, starting off, there isn't originally a ton of developers on Solana to switch? Solana's had a ton of momentum, so it wouldn't make any sense for a lot of them to switch. And because Solana's had a ton of momentum, it's hard to stand out. Like, there's a lot of good DeFi apps and products already on Ethereum, layer 2s, etc. But Solana, with all its momentum, like I mentioned, there actually isn't a lot of like maybe good apps to bet on. And so that has just been like a vacuum that it needs to find some sort of balance to where, we have too many DEXs, too many of these things. And maybe that's the equilibrium where that dev shift stops happening.
I'm specifically looking at the sample of quote unquote good founders, and the good founders by definition are building novel applications. So I'm not talking about the founders building the 200th DEX, for example. Okay. I'm really talking about founders building things that haven't been built before, and these things are happening more on well, I wouldn't say more on Solana, probably equal between Solana and Ethereum, but the pace of increase, the rate of change is faster on Solana than on Ethereum. So you don't want to look at where the puck is today, you want to look at where the puck is going.
So when you think of the future, so when I look at like the Ethereum roadmap, I look at the Solana roadmap, I kind of assume, and I see it happening, and I think it's actually going to be within the next year, I think this is solved. I assume fragmentation gets solved between layer 2s, and that layer 2s are interoperable, right? So you can move between layer 2s really easy, and you don't have to worry about like different gas for all these different chains and stuff. Like all that gets abstracted away. It just feels like eventually we'll get there. People are really innovative. People are able to they're able to solve really complex problems. We've done it many times before in the crypto space. It's just betting against that seems ridiculous because people surprise you. If that happens and you could have hundreds and hundreds of these chains interoperating, it seems to me that like it would be really valuable to have lots of different chains that are really specialized versus one single chain that's really generalized. If it's just as easy to move between apps, if using different apps is the same as, kind of feel versus Solana, where does Solana fit into a picture or in a world like that, when I can have a privacy chain over here and I can have this specialized liquidity chain that's like way more efficient and is serving all these other chains? How do you think in that kind of picture, in that kind of outcome, Solana fits into the picture?
Okay, so there's two big assumptions here. One is the user experience in that world on Ethereum is in fact as good as a monolithic Solana chain, meaning the interoperability is just as good. Like the friction for bridging is nearly zero. The total TPS and fees are as good as Solana. So if all these are true, yeah, I could see Ethereum winning. But that's one assumption. The other assumption is this needs to happen very soon. This needs to happen within the next year or two. Like the window of opportunity is closing. History is path dependent. If you give Ethereum 5 years to solve this problem, by then it's probably too late.
And that's just momentum that you're saying because of it. Yeah.
It's just momentum. It's just Solana attracting the best developers, the best builders. But if these assumptions are true, like Ethereum solving this problem within the next year, and then the UX is truly as good as Solana, I would give it a way higher than 50% chance of Ethereum winning.
I mean, that's what I'm saying. Like when I look at things like, okay, right now it is somewhat fragmented in that like you have the super chain and like all their little conglomerate of whatever. You have things like the ag layer, but you have ZK Syncs. I forget what they're calling their thing, but everyone's coming up with their own interop solutions within their own ecosystems. But I look at something like the Polygon's ag layer. It isn't like constrained. I think it's a really good model to look at because it isn't constrained to just like Polygon chains. You don't have to like do anything. There's no weird taxes you got to pay. Actually, layer ones can plug into the ag layer and interop between chains. And so what they're looking at, or what they're saying is, and they said originally by the end of this year, now they're saying early 2025, you should be able to move between chains sub 5 seconds, and it's completely abstracted away. So if I want to use an app on a different chain, I just use that app. I don't have to think about what chain it's on. I just go and use that app. And there's no like, it uses like ZK tech. So it's proofs and all this kind of stuff. It's way more complex than, I understand. But I do know they have a really smart ZK team. I know they spent like $500 million to hire or to buy out a bunch of little startups and build this. And so, and I know a lot of them are thinking about wallet abstraction, abstracting gas away, all these kind of things.
Also, this problem, like solving the when and how well Ethereum community is able to solve this problem, I don't even think about it because that is not a problem that will have even if it's solved, will have an effect within a year, and the cycle will probably end in a year or two.
I see.
So what I think about right now is just where is the momentum? Like I think for most people, you probably don't want to hold a token for too long, except for Bitcoin. Bitcoin is here to stay. Everything else, yeah, it's probably not a great idea to have a 10-year time horizon.
See, I've misunderstood. I've listened to so many podcasts, so many things, and I understand exactly what you're saying because I have the same feel where I'll invest into a token, especially I have certain alts that I'm investing into, specifically with the idea that if retail starts pouring back in, liquidity starts pouring back in. It's like less than 1% of my portfolio. It's like 0.3% of my portfolio. But I'll make these bets, and the idea is, hey, this is a bet until the end of this cycle. And then I'm selling, I'm out, and then next cycle I'll reassess. And so I totally understand that. So your mindset is, hey, I'm looking at this cycle. I'm here as an investor, and I'm looking for the momentum here. And I think I mostly agree that, this cycle, if ETH does really well, we have this ETF, we have all these things, ETH skyrockets. Let's say it goes to 2 trillion or some crazy number. Well, then Solana is just like as a measure of like now the watermark going up for ETH is going to rise to try to, in contrast to that watermark, right? Like it's going to try to rise to a level where it hits the same watermark. What's your most controversial take about crypto?
Oh yeah, it's really hard. I don't have anything contrarian anymore. Like I kind of agree with the market.
You kind of agree.
Like most of the time, I actually do agree with the market, especially in the middle of the cycle. Like there's nothing like in the middle cycle. Okay, so here's my contrarian take. In the middle of the cycle, you don't want to be contrarian. You want to be consensus because you want to follow the momentum. The time to be contrarian is at the beginning of the cycle when the market is extremely fearful or apathetic, or towards the end of the cycle when the market is euphoric. Those are the times to be contrarian.
I see that. I can feel that, man. I don't know if you know any of my story, but after the collapse of FTX, I rarely have these moments, but I had this like high conviction feeling. I was like, if somebody didn't sell after Luna and FTX, they're just straight up not selling. And so I just felt very deeply that we had bottomed. And I literally, this is probably stupid. You're going to say it's stupid. I took my entire net worth and I went all in to crypto at that moment. I took besides selling my house, I took every cent I had. And obviously that bet has played out really well. Probably won't do that again. That was one of those high conviction moves, but that's right. Like everyone told me I was wrong. And that's like, I knew I was right because I was like, no, you're wrong. There's literally no one left to sell. And so you're right. It's like, you have to kind of weave back and forth. Like there's a balance of like, you can't always be contrarian because if it was that easy, then, it'd be easy to win.
Yeah.
All right. Well, hey, it was great to talk to you. It was great to have you on. As always, none of this is investment advice. Crypto is crazy risky and you should always do your own research. Thanks for jumping on here and it was great talking to you.
Yeah, likewise. Thanks for having me.